Okay, class, this lesson is on financial position. This is 2.1 section of chapter 2. From the textbook, financial position is defined as the status of the business based on its assets, liabilities, and owner's equity. There are three steps of determining financial position. First, list all the things that you own in monetary values. These are called assets. Second, list and total your debts. These are called liabilities. And third, calculate the difference between the total assets and the total liabilities. The difference is called equity, also referred to as capital, owner's equity, or net worth. If we follow the example in the textbook, we list all the assets of this particular individual, Chris Turner. So he has $55 in cash. He has a bank balance of $245. He has $3,000 in Canada savings bonds. He has a mountain bike that he thinks is worth $620, a snowboard that he thinks is worth $750, a computer and electronics at $1,900, a cell phone $500, and he thinks that his wardrobe is worth $2,700. In step number 2, Chris then lists and totals all his debts. So he owes his brother Philip $220. He owes his dad $300. He owns the cell phone company $400 for total liabilities of $920. And then finally, step 3, you calculate the difference between the total assets and the total liabilities. Again, the amount that you get is referred to as owner's equity. So the total assets of $97.70 minus the total liabilities of $920. The difference, or the owner's equity, ends up being $88.50. So the example that we just completed on the last slide is an example of the use of the fundamental accounting equation. It states that assets, or A for assets, minus L for liabilities is equal to OE, or the owner's equity. The fundamental accounting equation can also be rearranged to determine amounts for assets and or the liabilities. In this case, if we're isolating for assets, you can also have assets is equal to liabilities plus owner's equity. So if we go back to the example with Chris Turner back from slide 2, the assets, he had assets of $97.70 minus liabilities of $920, so his owner's equity is $88.50. Again, if we rearrange and isolate for assets, he has assets of $97.70, and this is equal to the liabilities of $920 plus owner's equity of $88.50. Notice how in both forms of the fundamental accounting equation that the left side equals the right side. This is no different than if you were using an equation in math. So this marks the end of the video for this particular lesson. Remember, from the video that I posted on how to take notes or how to prepare yourself for class based on the videos, you're supposed to use the task method. So take notes, summarize, and come to class with questions. If you have no questions or you feel that the video is straightforward, you can potentially think of potential test questions that you think may show up on the first unit test regarding this concept.